Hey guys, so this will be a video on how to draw a trend line on the chart. Either you're a forex trader or an indices trader or a crypto trader or a commodity trader, it's basically gonna be the same way on how to draw trend lines. So basically everyone draw trend lines differently, right? Some people like to draw their trend line from body to body. So example, I'm going to give you an example of what I mean by body to body. So you can see, let me zoom out a little bit. From body right here, this is the body of a candle, right? A body of a candle right here to another body of a candle. You can see that's how some people like to trade. So if I zoom out a little bit, you can see that the trend line right here is touching the body of the candlesticks. And for you to get a trend line, you need two or more points to get a trend line, which means that for a trend line to stand, you need 2 points. Without that, you can draw a trend line on 1 point. And what I'm talking about in that is, let me just draw a scenario right here. Let's say we have like an uptrend, right? Something like this for an uptrend, right? Let's say something like this for an uptrend. You can just draw your trend line like this. It makes no sense because you can see right now that the trend line is just touching one side, right? There is no other additional one. So to draw a trend line appropriately, you need two or more touches to draw a trend line, which means for us to draw an appropriate trend line, right, we need two or more touches, right? Which is the first touch right here and the second touch right here. So that's when you know that you have correctly drawn your trend line. Without the 2 points, it doesn't make sense to draw a trend line. So if you don't have two or more points to draw a trend line on, it's advisable to just leave it and don't draw a trend line. So that's it, you need two or more points to draw a trend line. So like I said, some people like to draw a trend line on the body of the candlestick, which is something like this. If I zoom out a little bit, like I explained earlier, like this and like this and like this, right? But as for me, I like to pick everything, which means I like to start my trend line from the week to the week, right? So which means for me particularly on how I trade, for the trend line, I'm gonna adjust the trend line right here. You can see that the trend line, let's adjust the other one right here. So you can see right now that the trend line, if I zoom in more, right, we can see that the trend line, it's actually touching the wick, right? The tip of the wick, right? So that signifies that the trend line is which have like 2 points, right? It's kind of 3 points right here, but like I said, the minimum of you drawing a trend line, before you think of drawing a trend line, you need 2 points. Is either you draw from the body to the body or the week to the week. Like I said, me personally, I like to do weeks to week, right? But you can decide to do body to body based on your preference. So another thing again for a trend line that we have to also know that to solidify the trend line, we need 3 points. 3 points solidified trend lines. I think I'm gonna write a bullet right here. So let's see. First point will be you need, let me reduce the size. So firstly, you need two or more points to draw a trend line. Second, right, you can start drawing your trend line from the body of the candlestick or from the wick of the candlestick, the wick of the candlestick. That will be personal preference. So the last one is third touch of the trend line solidified. Solidified the trend line. So that's like the point. Let's see. Let's put okay on the week. Okay. Type 2. Okay. So these are like the points you need on trend lines, right? First of all, you know it has to be 2 or more points. You can draw your trend line from either the body of the candlestick, from the body of the candlestick, or from the wick, or from the wick of the candlestick. Yeah, but I write here in this one, I'll be using my example for the wick of the candlestick because, like I said, that's all I genuinely use, right, from the wick. So right now you can see right here we have this right here, we have this right here, first touch, second touch, and third touch, right? First of all, I said we need 2 points, right? So let's just assume, if I adjust this, let's assume this right here, this is also a valid trend line, right? This is also a valid trend line. We can see that we have 1 touch here, 2 touch here, right? That's a valid trend line. Another thing you can also see is I can also still draw a trend line like this, and it's also valid from here to this place right here. That's also a valid trend line. So you can decide to draw this 2 trend line. That's very much valid. Let me change the color of the other one. That's also valid. And you can see I said you can draw it from like the wick of the candlestick. That's how I draw it. Then the other one is third touch of the trend line, solidified the trend line, which means you see that this part we have 1 touch here, 2 touch here, 3 touch here, and you can see that as soon as we have the fourth touch, what do we see? We see a very impulsive move. It solidified the trend line compared to a second touch. So when you see a third touch around the same trend line that has been rejecting, it just is higher possibility that the market is going to go in that direction because the trend line now perform as a resistance, right? It perform as a resistance, and it tried to break it one time, it didn't break. It tried to break it second time, it didn't break. Then hit it breaking in the third time would definitely has an higher chance, like I said, previously that you don't predict the market, you react to the market, right? But there are some things that give you edge in the market. So when you see a third touch of a trend line, there's a higher possibility that the trend line is now becoming like it depends. So if it's like a buy, the trend line right around this area right here is becoming like a support. It's trying to break in, but it's not breaking in, which means there's a high possibility that it's gonna push more to the upside. And we can see that as soon as we have the third touch of that trend line, we rank to the upside. But our advice not to just trend based on just like third touch of trend line. You need more confluences. So, for example, if I want to take this trade right here, right, let's assume this particular price action hasn't play out, right? If I want to take this trade right here, what will I do? My first step is okay, now that we have the first week rejection, right? We have, sorry, the third week rejection around this area right here. Now I kind of like lean towards a buy, right? But there's no confirmation yet apart from the fact that we have third touch on the trend line, right? And like I said, I need more confirmation. So as soon as we say, as soon as I notice that it's getting harder to break, now my bias is on a buy. Now I need more buy confirmation for me to take the trade. As soon as the we see this candlestick right here, this particular candlestick right here, we can see that the candlestick actually engulfed this previous candlestick right here. That is another second confirmation that the market is going to continue to push to the upside. Me, I like to do three confluences before I take through. So that's the second confluence. First confluence is we have third touch on the trend line. Second confluence is after the rejection on the trend line, we have an engulfing candle that shows that the buys are in the market, right? And my third one that I will probably wait for, right, is gonna be a break of structure, right? So this what I'll be expecting is a break of structure. So as soon as we see this right here, this will be a breakout structure because we can see that this is the l- higher high that we have right here. We have this higher high right here. As soon as we have the higher high, this candlestick broke the higher high and closes up above this previous higher high, which also signifies that the market is going to push to the upside. What I would like wait for is an entry, and for me to get an entry, I like to wait on retracement to get an entry, right? Which means you can go to more smaller time frame. Let's just say like an hour. Let me see an hour and see how the market goes. Okay, the hour is kind of better depending on how you trade. So if you're an intraday trader, you can take your trade off of like 30 minutes, 15-minute time frame. But if you're like a swing trader, then you can possibly take your trade 4 hours, 1 hour, the least should be like 1 hour. So right now what I'm gonna do is as soon as I saw this break of structure right here, candlestick broke above it, I'm waiting for a retest. As soon as you see the market retested, so this is like an impulse, a correction, which is the retracement, like testing right here. This will be a good spot to take my trade. Right around this area will be a good spot to take my trade from because now I have three confluences that guides me, and you can now see that it's not just the trend line, right? That guides me to yes, trend line can work. I've said it previously too in my videos that I genuinely believe that all strategy works. You just have to find the edge of a particular strategy, right? As long as you're not just trading off of one thing, you are adding confluences. And three or more confluences is way better. It solidified your trade. So personally, I'll have taken my trade off of this area right here. Okay. I'll have taken my trade here because that's a good retracement. Then probably my stop loss will be below the lower low, right? Then how would I set my um TP? Depending on how you trade, you might probably set your TP to like 1:2. To me, I believe 1:2 and more is good, or 1:3, right? To set your stop loss, right? And or depending on how risky you are, this was the previous high, that we have, right, for our impulsive move. You can see if I zoom out a little bit, we have this impulse, right? We have this correction, and after a correction, we have a continuation, and we are taking our trade off of this continuation move, right? So it depends on how you are in the market. If you are conservative, some people just want something and leave. So if you're a little bit more conservative, then you might probably just take 1:2 and leave the market, or you can put your TP to like the last higher high, like I mentioned previously, and just watch it, right? So you can just trill your stop loss based on it. So as soon as you see this impulsive candle right here, right, you see this impulsive candle right here. Sorry, this impulsive candle right here, it came back to retest. After retesting, we saw this impulsive, which means it broke this previous high, and we see a break of structure here. That should still make you stay in the market, right? Even if you push your profit, as soon as it gives this new lower high, I'll probably put my um my trade in TP already, because it has given me a new lower high, which solidify that the market is still going to continue to trend to the upside, right? So you put your TP probably maybe around here, depending on how you trade. You just chill your TP, still give lower high, there's more confirmation, and we can see that when you broke this structure right here, the next candlestick was a very impulsive candlestick, which also solidifies that you can still continue to stick to the market. So basically what I'm just trying to explain to you is, yes, learn how to draw a trend line and trade off of trend line, but you can't just take a trade based off trend line. You need confirmations. You need 3 confirmations or more to solidify your trend lines, right? So that's an example of a buy that I just mentioned, and that's how you can actually draw your trend line and trade with trend lines, right? So now let's go in there and let's see a sell move, right? Let's see a sell move. Just gonna do the same thing, right? The same analogy, right? We have something like this. You take your trend line, right? You give your trend line. Trend line doesn't have to be perfect. It's not always going to be like the textbook all the time. You have this your trend line right here. Right now, after your trend line, what did you see? You can see based on this one, we have our first touch here, we have our second touch here, we have our third touch here. There's higher chance the market is still going to continue to sink to the downside based on the fact that we have that touch. That is our one confluence that you want to sell. Like I said, are you going to take your trade right around that area? No, you're not going to take your trade around that area, because you need confirmation to know that you are genuinely, like, the market has actually changed from the other direction to now the new trend, right, which is the sell. How do you confirm that? Because you can see right around this here, right here, that the market has been given by, we have an impulse, correction, impulse, right, correction, impulse, and all that right here, right, before we now start seeing the market drop into the downside. So first of all, we have to confirm that the market's structure has changed from buy to sell, right? So now, like I said, I have a third touch of trend line, which means I'm a little bit more biased on a sell rather than a buy. My second confirmation is I need a break of structure, right, or a change of character. Firstly, how will I do a change of character? You can see run around this here, right here. You see this impulsive move correction right here. You can see that this is like a um higher low, right? This is also an higher low because this particular one is lower than this one, which also signifies that the market is on downtrend, right? Sorry, the market is an uptrend, right? Now that, how do we know the market has now changed? Because previously we are trending up. First thing is we need a change of character, right? How do we get a change of character? You can see right around this area. This is the lowest higher high we have. If you put this trend line right here, right, we can see that we have a change of character right? So that's my second confluence that the market might continue to push to the downside. You can see them using might because no one knows the market, right? So so now we have two confluences. One confluence is we have third touch of trend line. The first touch, the second touch, the third touch. Another confluence now is we have a break of structure. Confluence two. Another one that I'm gonna see right now before I take my trade is we can see that after this retracement candle, after this rejection candle right here, after this total there stone candle right here, the next candlestick, we can see that this candlestick right here, this particular one right here, indicates indecisive candlestick, which means the market is still deciding if it's going to continue to push up or down, right? So you're not going to, that's not a confluence. Another confluence you see right here is going to be this particular one right here. You can see that there is this bull market that shows that the market is going to continue to push to the downside. So I will have taken my trade off of this area right here because that's a confluence. That's three confluences that we have that the market is pushing to the downside. So now if you put your mark right here, put your TP above the previous high and just 1:2. 1:2, right? And that's how you can kind of like take. So based on the fact that me, I have like a little bit more experience, right? How I would I have put my TP? I will have taken my push my TP to around this area right here, to be honest, because there is this imbalance that needs to be filled that hasn't been filled yet, which means there's an higher possibility that the market might get there. So that's where I'm gonna take my TP, probably around here. Right here. So personally, that's all I've taken my TB because whenever you're trading, it's always good to look to the left to see how the market is so that um you can strategize based on what the market has previously done. So based on the me, I was taking my trade around this area, my TP around this area because of this imbalance. There's a higher chance that the market is going to push down to actually fill that imbalance up. So that is how you draw trend line and trade trend line. So this is like a basic way on how to trade and draw a trend line, right? So another one I want to do is another quick one is like a break and retest of a trend line, right? So let's if you come here right here, put your trend line from here to here, right? We can see that based on what I've explained earlier on, we have this first touch right here, second touch right here, right? Which was like a support. So some people will believe that, oh, when this market push up right here, if the market push up right here, right, and come down, there's an higher chance that the market is going to bounce out of this trend line and continue to push to the upside just because we possibly have to touch our trend line. And that is the reason why I said that's why you need confirmation, right? Before you take your trade. You can't just say, oh, it's downtrend now. It's sorry, it touched the trend line. I'm just going to take off my trade. If you have just said, okay, because the market has reacted around that area two times, then I'm just going to put my position right here and just put my position without doing more analysis and just target, right? So, like, if you actually take your trade here without waiting for more confirmation, right, you will see that your trade will probably get stop out because we can see that the market actually retraced from here, right? Rejected, sorry, from here, but we can see that we broke here and it has just retraced, right? But for us to take a trend line like this, what would I have done, right? One, now that we have a break of trend line, that's one possibility that there's a possibility that the market might actually push to the downside, right? But like I said, we need more confirmation because this probably might just be a fake out, this might just be a fake out to continue to push to the upside. There is a possibility like that, right? So now that we have this break of structure, what are we going to wait on first, right? A change of character, because um we can see that the market was previously on an uptrend. Now we have to confirm now that this particular movement right here is not a false break, but an actually break, right? Which means I have to wait for confirmation that the market actually broke this previous low right here, right? So that's my first, my second confirmation that it breaks, right? So we can see that the market, if I go to my 1 hour time frame, let's see. Yeah, we can see the first confirmation right here is we can see we have this break of structure right here, but the break of structure genuinely did not solidify, because if you look at the candlestick right here, you can see that the candlestick that broke this previous structure did not close, right? We just had this weak rejection right here. So that means I'm not going to take the trade because it did not confirm that there is a break of structure. What am I? There is a change of character. So what will I be waiting for, right? My second wait will be, I can now put a trend line right here from here to here, right? You can put a trend line from here to here, and you can now see that the trend line from here to here, we have one touch, second touch, right? Right, this will not have happened yet because we just had this break of structure, right? So because I'm giving you an example based on how I would trade it in real life, right? Based on that fact, we can put a trend line here, but like I said, this particular movement will not happen here, so we'll just have one touch and second touch. Now, like I said, I need more confirmation, because this break of structure confirmation right here, the candlestick is not really solid to show that the market has actually changed. So now I'll look for a change of character. What, right? So one, if the market starts pushing like it pushed around this area right here, right? Come here and touch this and reject it around that area. That's a confluence that the market might push to the downside. And I still need one more confirmation, right? So my second confirmation, because this break of structure right here did not actually confirm, so that means I only had one confirmation. Now that I have the third touch of a trend line, right? Now I have second confirmation. Like I said earlier on, I need three or more confirmation. My next confirmation will definitely be a break of structure. We can see I'll wait for a price action to actually break this previous um lower low right here. So that's what I'll be waiting for. So as we see that the market pushed to this upside right here, then the next candlestick actually broke the structure. If I go to a smaller time frame, just so you can see the candlestick, you can see that this candlestick right here that broke this previous this candlestick right here that broke this previous high, sorry, this previous low, is solid, right? So there's that confirmation that the candlestick, the sell candlestick, is solid, which means there's a high probability that the market might continue to retrace from downside. So that's my third confluences, and now I'm comfortable taking the trade even if it goes south. We know the market will not always go your way 100%, but as long as you follow your own strategy, even if the market is stop loss, you know that you followed your strategy, so it's to be as painful as following your strategy. So now I'm going to look for an entry. Like I mentioned, I don't enter off an impulsive move, I need a retracement. I don't enter off an impulsive move, I need a retracement to enter off of, right? So now that we've retraced around that area, I'll be looking for an entry. My entry will certainly be after this candlestick right here, because we can see that the candlestick right here engulf the previous candlestick, which you can see right here, right? It's way bigger than the previous candlestick. So that shows a confirmation that the market is going to continue to push to the downside. And that's where I'm going to take my sell. I'm going to take my sell from this particular candlestick right here. Right here, put my TP above the previous high right here. And like I said, I'm going to aim for 1:2. That's like the minimum I aim for. But like I said in my previous example, that if I was actually the one in this trade, let me go to a bigger time frame so that I can see the left side better. If I'm actually the one in this trade, 1:2 is okay. But like I said, because I like to look left as well, like I mentioned, there is this imbalance right here, right? So I believe there's an higher chance that the market might come to that imbalance right here and feel that imbalance in. So definitely it's safer for me to actually take my trade around the imbalance. Either you want to put it up here or you want to put it middle of the imbalance or down of the imbalance. That all depends on you. And you can see that instead of having like 1:2, I now have like 1:5, right? So that's basically how I draw my trend line and strategy. I even showed you like a simple strategy to also use in trading your trend line. So basically that's how you draw a trend line, and you can also take your trade off of trend line strategy, guys. And this is how it is. And I just want to put it out there, trading doesn't have to be complicated. You can make it as simple as you can, right? And like I said, all you have to do is back text and forward test so that you can understand the edge of that strategy and understand, because you're going to take losses as well. So that is my quick tutorial on how to draw a trend line and a simple strategy on a simple trend line strategy as well, because I combine both together. And if you have any question, guys, please comment in the section below, subscribe, and I'll see you in my next tutorial or video. Bye, guys.